My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to save you some money. My job is just to entertain, but to also put this one into context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Boom! That's the sound of a 10% tariff hitting the $300 billion in Chinese goods that were still duty-free. It sounds a lot like falling stock prices, doesn't it? The averages started strong, buoyed by some great earnings reports. But after the news broke, the Dow ended up plunging 281 points. S&P plummeted 0.90%. The Nasdaq fell 0.79%. I've got to tell you, that wasn't enough. It should be lower. Yes, in one fell swoop, President Trump has given the hardliners exactly what they want. If you import goods from China, he's making you pay, no exceptions. That includes the iPhone. No wonder Apple stock reverse was the most visible one that went down. It went from up big to just, well, ugly, because it's the most visible importer. Suddenly, everything, either they need to eat the tariffs, or they need to make their phones even more expensive relative to Samsung, which does its manufacturing in South Korea. Can you imagine? The outcome of this is that Samsung's the winner. But Apple's just one example out of many. I just use it because it is so in your face. The president figures he's given American companies enough time to get out of China. It's been roughly a year and a half since the first big steel and aluminum tariffs. They haven't changed their sourcing. Well, he thinks that's on them. Of course, the markets hated it. The reaction was so negative that the yield on the benchmark 10-year Treasury broke down below 2%. And by the way, that is a textbook sign that bond investors fear we're headed into a recession. There's no ifs, ands, or buts about that. The president has made it clear that he's had enough of China, and our economy is strong enough and our stock market is high enough that we can handle the escalation into what is definitely, you can't say anything otherwise. It's not a trade tiff. It is a full-blown tariff war, and I get where they're coming from. Tariffs are bad for the consumer, and obviously the Chinese need to retaliate. You have to wait to see what they do. If you're a high-ranking member of the Communist Party, you can't just give Trump what he wants here, some big agricultural purchases and a crackdown on illegal fentanyl. No, it would make them look weak. They despise looking weak. It's a paramount concern. I told you all along that this trade war would keep escalating. While there are two camps in the White House, the Hawks and the Doves, I think the Hawks, and have said this over and over again, have much more influence with the president than the Doves. After last year's failed tete-a-tete in Buenos Aires and the collapse of the trade talks in May, when the Chinese walked away from what looked like a done deal, the hardliners made it clear they weren't going to tolerate any more backsliding on the part of the Chinese. Sure, Trump gave the Doves a real chance here. There was a ceasefire when he met with President Xi at the G20 conference, but that looks like now is merely a delaying action. The free traders in the administration, led by Treasury Secretary Mnuchin, have one last window to come back with something, anything, that would show China's willing to deal in good faith. When Mnuchin came back empty-handed, President Trump made his move and slammed the window shut. Now, the thing I was most concerned about is the reason to sell stocks, a blanket tariff on all Chinese goods, with no exceptions, including Apple, with a stock that was soaring before the tweets hit. Now that's going to go into effect starting next month, September 1. And I got to tell you, it's the real deal, people. It's the real deal. I was surprised that the averages weren't down even more. Again, from the very beginning, despite the endless mainstream press commentary that's been wrong otherwise, I've told you that the hardliners would win out. I figured the free traders in the White House would get one more stab at a deal, and when that failed, there'd be more tariffs. It's why I've been warning you endlessly about those last $300 billion worth of Chinese imports for months. The only thing I got wrong was the timing. And even there, I was pretty close. I actually thought it was going to happen this weekend. That's why I repeatedly told you the trade war was the major obstacle to higher stock prices and why I felt that, well, let's just say that Fed Chief Powell was really right when he made that cut yesterday. He had an inkling. Now, he didn't know from the president. He had a feel like I had to feel. I want to give you my perspective here because I'm literally of two minds about this stuff. On the one hand, I absolutely favor anything that can help level the playing field with China. They've been breaking the rules for decades. They are pernicious. I've told you over and over again that the hardliners would win. The free trade faction simply didn't understand how angry and betrayed the president felt when China never came through with those agricultural purchases they promised him personally, or its fentanyl crackdown, which the president knows is killing many, many Americans. I think the administration is betting that China will blink. They may be tempted to hold out until after the election, but that's a crapshoot now. Oh, President Biden would probably give him a better deal. But President Warren would crack down even harder than Trump. I think they see that. And, of course, if Trump gets reelected, he's not going to be thrilled that the Chinese made him wait. And, look, these new tariffs are just the tip of the iceberg, people. If China doesn't deal, then I have a pretty good feel that Trump views this 10% duty as nothing more than an opening volley in the next round of the trade wars. He's itching to take all the tariffs to 25. He is doing that. At which point he thinks the Chinese will realize that their economy can't take this kind of pain. They'll need to play ball. Remember, Trump smells blood. He believes the Chinese economy is weaker than ours. He's right. And he doesn't mind pushing their economy and their stock market over the edge. What I am hearing over and over again, it's better to take tariffs high and bring them down than to not have tariffs at all. What does it mean for you? If you have stocks with some huge gains, I am giving you my blessing, because the market wasn't down that badly, to take a little off the table. Not a lot. This is not that call, the giant sell call. If I see that in Twitter, I will come after you with everything I have. We are barely down, though. We haven't even seen the Chinese response yet. And I have to believe it will be swift. And when they do, the stocks are going to go lower, and you'll be glad that you sold a little. There's no reason to be a hero here. You got to wait and see what happens. That's why I think it's too soon to buy anything but the domestic stocks that have zero exposure to China, either as a supplier or as an end market. After the smoke clears, companies that cater to small and medium-sized businesses could be worth buying too. Again, what to sell? Look at what you have a lot of gains in, okay? I'm not going to give you a list. I'm not going to give you a list because there's a lot in the S&P 500 that's too high after this. Second, the 10-year going below 2% is your green light to buy the utilities with safe dividends. My favorites, to repeat them, and it's been the same three for years and years: Con Ed, Dominion, and Best of Breed American Electric Power. It is still not too late to own those. Most importantly, though, once you take profits, and I sanction taking profits, there's no reason to start buying immediately. These tariffs are game-changing, because they make it clear that President Trump is not going to stop. He'll press and press and press because he is furious at China, and he thinks the trade war is a winning campaign strategy. See, he wants the trade war going into the election. These tariffs will hurt you and me. We can take the pain. We need to, but you must recognize that the pain is going to extend to your portfolio. Unfortunately, this makes it hard to justify buying many of the usual suspects that would normally circle the wagons around in any economic downturn and we're worried about a recession. That includes even the magnificent Procter & Gamble, to use an example of something that had just reported a great quarter, that normally I would say, buy, buy, buy. They may do too much business in the PRC. Might be a natural target of retaliation. One thing's certainly clear. Jay Powell, our clever Fed chief, had great intuition about these tariffs. Can you imagine how bad today would have been if Powell hadn't cut us that quarter-point break? Plus, he's now got a lot more ammo. Don't listen to people who say he doesn't, please, because you see they're wrong. I think after initial stumble, Powell's doing a great job. And the critics, including the president and some other people, are saying he's not a great communicator. Why don't you give the man a break? The time to hit him was when he was wrong, not when he's right. Look, I believe the president's right to crack down on China. I've been making this argument for decades. This is nothing new. I used to say the same thing when I worked with Larry Kudlow, who was a great free trader back then. He's now the president's chief economic advisor on the show we had for years called Kudlow and Cramer. I was pro-tariff back then because I recognized how China had targeted and destroyed so many American industries. I've been passionate about it for decades. However, I've always accepted that this kind of move would hurt the stock market, at least in the short run. But I'm not just for higher stock prices. I'm not that craven. So again, there's no hurry to start picking among the rubble here. We're now back in a world where international companies will be forced to cut their forecasts. Here's the thing. As interest rates go down, the alternatives to the stock market keep getting less and less enticing. Sure, gold's worrying because it always does well in times of economic chaos. I'll have 2 gold stocks I think you should buy later in the show. But high-quality dividend stocks without much Chinese exposure will be the winners once the smoke clears, just as they were after the last 2 rounds of tariffs. I've studied those too. That's what won first. Bottom line, we just have to wait until the dust settles, please. Then you can start buying some high-quality companies at a discount that don't have Chinese exposure. And you will definitely get a discount, I believe, because it's too hard for individual stocks to escape the downward pull of the entire S&P 500 when estimates have to come down for so many different industrials. Carmen in Connecticut. Carmen.
Hi, Jim. Thank you so much for taking my call.
Thank you.
I really am in trouble with the stock. I bought Five Below, and in doing my research, it said that they were opening 4,500 new brick-and-mortar stores in the U.S., and the earnings seemed good earlier this year, and I bought it. Now, it's been going down really, really big time the last month or so. I don't know if it's a question of the tariffs. It seems to me it might be something more that I've missed. So if you could help me, I don't know if I should sell it.
No, well, we sold it for Action Alerts Plus. We told the club members, look, this one's going to get hurt by tariffs. If there are more tariffs, it will get hurt. These next wing of tariffs, this next round, really do hurt them. They're going to have a lot of, I think, merchandise that is going to have to be charged more than $5, which is their MO. So my take is it's not too late to sell. You can revisit it lower. It is a great regional national. Brian in New York. Brian.
Hey, Jim, big booyah from sunny Long Island. Longtime viewer, big-time fan. How are you doing today?
I'm doing well. How about you?
Awesome. Listen, I appreciate all you do for all us little guys out there, and I got a two-part question here for you on Bank of America.
Okay.
Where do you feel the price of this stock is going to be, let's say, in the next 3 months? We all know about the Fed dropping the interest rate a quarter of a percent. We don't know if they're going to drop more or not. This stock has been like in this 29 range, and it's not going anywhere. It was about to go 31. And my second part is, why in the world did Bank of America drop so much today after Trump's announcement of adding the 10% additional tariffs on China? Meanwhile, Bank of America is here.
All right, here we go. I'm going to tell you what's going on here. When people think that a recession is coming, they sell banks that have credit issues. That's what they do. They look at the bond market. The hedge funds look at the bond market. Then they sell the international banks, which Bank of America is. And you know what they do? Then they buy the financial technology stocks. I have a couple later on that I'm going to recommend. But that's time-honored. It's what they do, whether it's right or wrong. It's called the playbook, and they follow it. Dave in Kansas. Dave.
Jim, Cramer, booyah. Thanks for taking my call. I've been a big fan for a long time.
Oh, hey, you're very kind. Thank you.
I wanted your take on FICO, Fair Isaac Corporation. I picked it up 4 years ago at $91 after reading the analyst piece, and it's hardly missed a beat since then, almost up 300%. Everyone knows their FICO credit score, but it's not a mainstream stock that gets much airtime on CNBC, and I've not heard you mention it. But just had another blowout quarter, up over 3.5% today, and now has a market cap north of $10 billion.
Yeah, Dave, you're right. I have not done enough on Fair Isaac. It is a quintessential fintech company. My bad that I haven't. It's a company I like very much. That's why it's bad. If I didn't like it, well, then it's be unassailable. Then I'd be bad. But I like this company very much. You can't get them all. You can't. All right. Okay, it's been a brutal couple of days. For now, I want you to wait until the dust settles. And if you want to, you can raise some cash with some of the high flyers. Look, we did some for Action Alerts club members. I can't tell you otherwise. On Mad Money tonight. It was a tough day for the average, but I'm eyeing one stock that could offer your portfolio some stability in an unstable market. It works in this environment. It's my exclusive with the CEO of American Tower. Wow, that's a good business. Then our interest rate signaling that a recession is around the corner. I'm going to give you my take. And it's a company on a quest to improve detection and treatment for breast cancer and ovarian and many others. Don't miss my exclusive with the CEO of Hologic. So I want you to stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.